Ever wondered how pro traders seem to nail their market entries and exits every time? The secret might just lie in one simple yet powerful tool, Fibonacci. In this video, I'll walk you through how to set it up, use it effectively, and combine it with other strategies for the ultimate trading edge. Stick around, this could transform your trading game. Fibonacci retracement tools are based on the famous Fibonacci sequence. This sequence reflects ratios found in nature and financial market, which traders use to identify potential price levels for support, resistance, and reversals. Here's why Fibonacci works. Big institutions and banks often set their trades around these levels. When you align your trades with them, you are playing alongside the big players. So now let's see these Fibonacci tool and those key levels in action. So let's start by setting up a Fibonacci retracement tool on our chart. So you can find it under Fibonacci tools here, Fib retracement. So all you have to do is just draw like this, and you will see there are different ratios like 0.382, 0.5, 0.618, 0.786. So by default, you'll see like more options. If I double click on it, you will see 0.236, and you can see some other numbers here. So normally, we don't focus on these numbers 0.786 or 0.236. Our main focus is on 0.5, 0.618, like where price will retrace, and we'll look for proper setups. So now you can see 0.5, 0.618. Sometime when you do see like a good momentum, you will see pullback only to 0.382, and from there again price moves up. So it really depends what is your trading strategy. Personally, I always look for like a golden ratio, like we call it like 0.618 area as a golden ratio. So when we do see price pullback over here between 0.5, 0.618, so there is a high probability that setup may work very well as compared to some other levels. So this is one of those tools again that normally we use in trending market. So let's go over how it looks like. So we assume, so let's say like we do see like prices moving from here, pull back, moved up, pull back, moved up. So here's our low, here's our high, higher low, higher high, another higher low, another high high. So what we will do anytime like now, so what we are looking at, we do see it's by trend, right? Probably we do see like low, high, higher, low, higher, high, higher, low, higher, high. So we should be looking for buying opportunities, not the selling opportunity. So anytime like when we have to draw a Fibonacci tool, so for buy setups, we'll be drawing it from low to high. So for example, assume like we don't have this part yet. So what we will do, let's say when price moved from this point to this point and now it started to retrace. So we will simply draw our Fibonacci tool from low to high. So in this case, see like a price retraced over here and then again moved high. So now like we'll move on to next opportunity. We did see price broke this high and made another higher high. So we'll again use our Fib tool when the price is retracing back to this area, and again look for another zone over here. Price is below at this level 0.618. We may see some like a bullish engulfing candle or something like that, and then again take another trade. So again, this is again there's nothing 100%, right? So you just have to choose the best setups. So you may see trades definitely will fail even if everything is perfect. So it is possible. So now this is the buy setup that we looked at. So similarly, we are going to look for a sell setup, and then we will look at the practical example. So we're back on the chart. So now we'll be looking at sell setups. So let's say price started moving over here, trend. It from here pulled back. Further, it's moving down, pull back, move down. So what it did, this is a high point. From here, it created a low. From here, what did it do? Lower high. It was high, so this is lower high. And now it made another lower low. This was low, so this is another lower low. And from there, what it did, it created another lower high and it broke this lower low. So we'll mark it as another lower low. So now it's time to use our fib tool. So this is again just to show you like how market structure works. So in the future, I'll definitely create a video on market structure trading, how to understand it. So now assume like we only have this part. So we'll start with this. So fib retracement tool. So when price started doing the retrace, so we are going to draw our fib tool. So we do see it moved all the way over here, 0.5618. So we'll be looking for like a bearish engulfing candle or some other pattern. Or then here over here, like we'll take our position, our stop loss will be around over here, and target will be like 0.0 or down there and other like a extension. So once we are done with this one, we are moving on. And again, we retracement from this place to next lower low, pull back again over here. And from there again, it broke below this lower low. So now we are going to look at the practical examples on the chart. So like you can see how effectively it works. So let's take a look at this example. This is the chart, 5-minute Nasdaq, and this is 15th January. Market opened at 8:30 Central Time. So what we're gonna do, like I'll show you how to draw. So I do see like a price started this move right from here. So I'll just pick my fib tool and I'll start the wick all the way up over here. And from there, we do see market is doing the retracement all the way. So like even though it is doing, it is rejected 0.382 area, but as I said earlier, like in some cases it may work, some cases it does not work. So normally I don't consider this level. I only stick to zero point 0.5 and 0.618 area over here. So wait for the price to come back to your level and always take like a plus setup. So I'm on 5-minute chart, so I may get like maybe like a one or anywhere from 1 to 3 opportunities during a day. So, but again, I will be taking like A plus setups because I know there's a higher chances for those setups to work. So over here, like some people use 0.786 area for like as they're like a stop loss if they want, they can set it up. So if you want to do play around with it, you want to experiment, like say in this case, if you take the position either at this candle and your stop loss is set up over here, and then you'll target like a next area like a 0.0. So you do see like it really worked very nicely in our favor. So now we'll look at one more by example. So while I was looking for another example, so I came across this example. This is January 13th, 2025. So as you can see, this is the area like where we do see this strong move to upside. It broke above the high and created another new higher high, and from here, like it's coming all the way down to 0.786 area. And as I mentioned, like this is not something that I do consider. My preferred area is when price stays in this area, zero point 0.5 and 0.61. So over here, as you can see, like even though if you take the position over here, it didn't move much. Like it just stayed in this area. And from there, like yeah, sure, it did move up. But again, like in terms of like a high win probability, I don't rely on these levels. So I'll just quickly go over another buy trade. Okay, so here I did find really good examples. It's on Friday, January 23rd. So you don't really have to force anything, you know, like if you have a process in place, you will see opportunities. So like over here, we do see like it's around like 9 o'clock. So we do see like this move break, it breaks the high over here and made another high, and from here it was doing a retracement. So again, like I was not considering these small retracements. So wait for at least like a 3 candle retracement, something like a good level retracement. So what we're gonna do, we'll just pick up our fib retracement tool, and what we did, we are going to draw it here. So now let's see how it works. Like it came down all the way to 0.618 area. So there are like again multiple confluence. If you look at the price action, so you do see like a bullish candle was formed over here, and this is the zone. It's kind of like a break and retest scenario as well, right? So you just have to combine it, and if you want to like a draw a trend line, maybe you can see like all the way from the back, maybe there's a trend line or some other confluence like a moving averages, RSI, so many things you can combine with. Just about if just for the sake of like keeping simplicity, like if you just want to do like a price action trader, you don't want to rely on indicators, so you can just have a clean setup all the way over here, and 0.618. We enter here and we target 0.0, and this is a good trade right here. And so what happened in this trade? So like it made another high, it broke the high. So what we can do again, we can when Canada started retracing it again, it's a clean retracement. It's not doing any consolidation. So those kind of setups are ideal when it's not doing any consolidation. So we are going to draw it here and look at it, how beautifully it worked. So like if you're not comfortable taking a trade at this candle, so just wait for the strong bullish candle. We enter over here, target again this high, which is 0.0, and beautifully it hit our TP. So this is a clear example like how it works. So now I will show you two examples for sell setup, and after that I will go over like conditions when it does not work, and those are the setups that you should not take. So here's one sell example. It's January 10th. So we do see like a price is moving down. So like over here, it pulled back, and from there is a strong move to the downside, and it started doing the retracement. So as you can see, it's clear retracement. Like this is where you're going to see like a really like a high probability setups, A plus setups. So what I'm going to do, like I pick a pip tool, and I will draw it from top to bottom. So even though I mentioned like I prefer to keep it like in if the prices stays 0.5 0.618 area, but in this case since the price move is clean, so I'm going to consider this setup as a valid setup too, because like it did not go beyond 0.786 level. It stayed over here, and it didn't do any consolidation, so it made a bearish candle. So I can take, so like I will enter after the over here, and I'll target this area, and did hit it. So now we'll just look at one more sell example. So here is our sell example, second example. So this is January 7th. So we do see prices moving downward, retraced, moved down again. So what I will do, I'll simply use my fib tool here. So I'll draw it from here to here. We do see came to between 0.618, this area, created a strong bearish engulfing candle. I will enter over here, set up my stop loss over here in this area, and target 0.0, and it did hit it. So all you have to do is just wait for this setup, just set up some alerts or something. You don't really have to like stay on the computer the whole time, just watch the candle. Just mark that zone and wait for the price to come into this zone, and then just take your setup and let it work. And you'll really enjoy it. Like you'll be very happy like how perfectly it works. So now I will share like two examples, one for buy, one for sell, which will not be good setups, and you should avoid those setups. Okay, so here's really one of the good example that I was able to find. It's a January 6th. So as I mentioned, like you want to get a clean setups, right? Like when you do see like a price moved high, it broke the high over here, created a higher high. But like when it is coming down doing the retracement, you're seeing like so many different candles it's making. Like it's kind of like a sideways slow market. And let's say if we draw our fib tool over here, all the way from low to high. So over here, you're going to be seeing like those kind of setup that market is consolidating when it comes to the zero point 0.5 area, is doing consolidation. and it's a trap. You don't want to get into this trap because sometimes like you may say, oh, okay, it's creating a pin bar, so I'll enter over here, or I'll just enter over here, somewhere over here. We do see like a strong wick at the bottom, so buyers are pushing, so I'll take the position over here. Wait, it's a trap. It's going to hit your SL, and market will go in another other direction. As you can see over here, like it was slow market all the way. Like it took so long to come to all the way to this level, and from there it moved downward. Okay, so now I'll just go over one cell example. So here's an cell example, the setup that you should not consider. So over here, as we see, like a market open and it broke the low over here and create another lower low. So if I am going to draw a fib retracement when it started doing the retracement, so let's look at it and see what happened. So you see like price moved over here and it started doing like a consolidation over here. Like it started moving sideways. So that's the indication that it's a trap. Like it may move at back to this level, like but there is like a 50-50 chance. It's kind of like probably I'll say B or C setup. It's not your A plus setup, because like the value setup would be the one like that gets clean retracement to 0.618 area over here, and from there it will move down. When you see like a sign of like a consolidation, like it's creating like multiple candle, like a sideways over here, skip this setup. This is not your setup, because what's going to happen, let's say if you enter into the position over here, you'll see like, okay, like from there, because like sometime like you set up a pending order over here, then it will hit your SL. So I will suggest like not to set up those pending orders, and just wait for confirmation and look at the proper setup, then take the entry. So I hope you like this video, and if you're able to get anything out of it, that you learned something new, please share it in your comments, and I'll be seeing you in the next video. Please like and subscribe the video and share it with your friends. Thanks for watching.